영상이 시작되기 전에 먼저 등장할 5개의 문장을 보여드릴게요. 빈칸에 들어갈 표현을 유추해보세요. 단어 하나하나를 직역하지 않고 전체 의미에 맞게 의역하고자 노력합니다. 그게 바로 영어식 사고의 출발이에요. 그럼 시작해볼까요?
It's been such a persistent challenge. Companies holding stakes in each other. Kia holds a significant stake in Mobis. Maintaining a super complex opaque structure. The pressure is mounting internally and externally.
Welcome, everyone, to a special Magic of Listening session. We're here on the Smart English Listening Routine channel, where we aim to take complex topics and make them clear, insightful, and hopefully pretty fascinating for you. Today, we're diving into something quite specific but really important, the world of corporate finance and governance over in South Korea. We'll be focusing on Hyundai's, well, famously complex ownership structure, and a new regulation that's really shaking things up.
Exactly. Our mission today is to unpack what this circular ownership actually means and, why it's been such a persistent challenge for a global giant like Hyundai. And crucially, how this new 3% rule in Korea is changing the game for investors and pushing for more corporate accountability.
Okay, let's start with that term. Circular ownership. Can you break that down? It's like companies holding stakes in each other, right? In a loop.
That's exactly it. Think of it like a chain where the ends connect. Company A owns a piece of Company B owns a piece of Company C, and then Company C owns a piece of Company A, closing the circle.
Right. And Hyundai is kind of the classic example here, isn't it? You've got Hyundai Mobis owning, about 20% of Hyundai Motor?
Roughly, yes. And then Kia holds a significant stake in Mobis, around 17, maybe 18%.
And then to complete that loop, Hyundai Motor holds a big stake back in Kia.
Precisely. And sometimes their logistics company, Hyundai Glovis, gets mixed into this loop too. It can get quite intricate.
Wow. Okay, so it locks control within a group, maybe. Yeah. But why is that a problem, especially for a huge global player?
Well, there are a few core issues. First, there's the problem of unclear control. For anyone on the outside, like investors, it's really difficult to figure out who truly controls the group, who's making the big decisions. It's hidden behind all these layers of cross-shareholding.
Opaque, basically.
Very opaque. Second, you get capital locked inside the loop. Instead of that money flowing out to, say, new investments or back to shareholders as dividends, it just circulates internally. Some call it value trapped in the loop. It potentially stifles growth or shareholder returns.
Okay, unclear control, trapped value. What else?
And third, this often leads to a global discount. Foreign investors especially tend to dislike this lack of transparency. It makes them wary. So you often see Hyundai shares trading lower than, say, Toyota, even if their performance is pretty similar. It's known as the Korea discount.
Right, the Korea discount. So this isn't just theoretical. It has a real impact on valuation. For Hyundai Motor, it means it appears less valuable on the market. For Mobis, investors are probably always worried about this structural discount dragging things down.
Exactly. And for Hyundai Glovis, it's interesting. Its stock often jumps just on rumors of governance changes because everyone sees Glovis as potentially key to unwinding this whole structure if they ever decide to simplify things.
Okay, so there's this long-standing issue, lots of pressure. What's changing now? You mentioned a new rule.
Yes, this is the potential game changer. Korea brought in amendments to its Commercial Act, and the really crucial part is the 3% voting cap rule.
The 3% rule. How does that work?
So imagine the founding family or related parties own, let's say, 20% or even 30% of the company. Normally, that gives them huge voting power. But under this new rule, when it comes to electing audit committee members, the independent overseers, they can only use 3% of their voting rights.
Only 3%, even if they own way more.
Exactly. And at the same time, minority shareholders get to use something called cumulative voting. This lets them pool all their votes onto one or a few candidates, boosting their chances of electing someone who represents their interests to that crucial committee.
Wow. So what this means for you, the investor, is suddenly minority voices have a much better shot at getting independent representatives onto the audit committee. It really levels the playing field in that specific but very important area.
It absolutely does. And connecting this to the bigger picture, it significantly strengthens oversight of accounting, internal controls, and overall governance. Suddenly, maintaining a super complex, opaque structure like Hyundai's becomes more costly, more difficult to justify, and frankly, more risky from a governance standpoint.
So that's why you hear investors saying reform isn't just optional anymore, it feels almost inevitable.
That's the feeling, yes. The pressure is mounting internally and externally. The cost of not reforming is getting higher, which explains why Mobis and Glovis stocks react so strongly when there's even a hint of restructuring news.
Okay, so wrapping up our magic of listening session today. Hyundai's circular ownership structure may be once seen as a way to keep control stable. Now, with this 3% rule and stronger minority rights, it really looks more like a liability. The pressure for transparency is definitely on.
It is, and that leaves us with a final thought for you to chew on. How might this shift in corporate governance in a major economy like South Korea actually influence global investment practices elsewhere? And what does it tell us about the changing power dynamic between founding families and minority shareholders all around the world? Something to think about.
영어와 시사 경제. 두 마리 토끼를 한 번에 잡는 알찬 시간 되셨다면 구독과 좋아요를 꾹 눌러주세요. 감사합니다.